Welcome back to the channel. I am King Dubi, the founder of Blue Kings Forex Academy. And in this video, I will explain my market structure strategy, the same strategy that got me funded since 2 years now. I also gotten these students you see right here funded, and I've gotten them payouts as well. So if you seek the same result like theirs to get funded also, then it's time to learn what works. So if you've been watching my technical videos for a while, you realize my strategy is split into two: the buyer side and the entry side. So I don't mix both together. My strategy is not just made up of entry models, it's made up of the narrative and the entry model. Now, the narrative is literally with market structure. How do I find my buyers? How do I know where price is going for the day? Just so that I can enter towards it. So that's what I'm going to be explaining all through this video, how I create market structure, because I use market structure to decide where price is going. And right after the video, I'm also going to refer you to the exact video where you can learn my exact entry model. All right, so what you see right here is the diagram of the kind of patterns I look for on a higher time frame, and I don't go above the 4-hour time frame. Okay, the 4-hour time frame is my highest time frame I look at. Now you need to understand it doesn't matter what time frames you look at, but they should be few, and nobody say you must look at the daily or the weekly. Like, listen, you have to do what is easier and what fits your style. Now, this is my style. This is what got me funded. Pay attention. Okay, so as you can see, you see three picture patterns right here. This first pattern, now I'm going to explain it. So when you come to the chart, and then what you see is a trendy market going to the upside on the 4-hour time frame, and it's in this phase whereby it just broke a high. Every single person that trades understands this. It just broke a high, and what happened is it's in a phase whereby you don't know if it's going to retrace or keep going up. Now what I do is I drop to the 1-hour time frame. I want to see the 1 hour around here be bullish and no lows being taken out. Like, I don't want to see something like this happening. Okay, I want to see respect higher highs, higher lows in a very clean way. So when I see that, I know price is drawing to something higher. Okay, I don't know what it is, but then price is drawing to something higher. For most cases, it's literally an old high or old fair value gap, something right there that has to do with the exact important area of drawing price. That's exactly what you see me explaining here. We have the bullish trend looking like this. We have high, we have higher low. Now we just took out a high, and what you see me right here, you see me write it here: lower time frame trend confirmation. Now that gives me the go ahead that price is going up. So what happens is I know I am bullish. See how I get my narrative. Another scenario that happens very often is when you see price like this: bullish trend, we make a high, make a low, make a high, price retrace to a key level like FVG or other block or something, and it is reacting from there. Where do you think it's going to make a new high to follow the same sequence like this, see? So coming to the chart and seeing price in this way, where is your draw? Where is the next target? Where is price going to? Up. It's going up, and this is the destination it's traveling to. So if you come and meet the chart on the 4 hours in this scenario, you're going higher. This is literally very, very simple. Now, what about this? This scenario is when price is on a bullish trend, but it's trying to retrace. Now, this is very corny. Like, this is something that you must be very, very careful about, because it's not every little candle you see forming that makes you think price wants to retrace. What I mean is, you see a bullish trend like this, and then you start seeing maybe one red candle just form on the 4 hours. Then it makes you conclude that it wants to have a complex pullback, and then you start trying to sell. Now, this situation is very wrong because you cannot actually tell if it's ready to sell or not. Now, how do you know if it's ready to sell? Now, when I see a situation like this, I don't just trust it. First of all, remember, it looks like the first thing we were doing right here, where we don't know if it's trying to go up or retrace. Now, what happens is that there's something I do. I go to the 1 hour. If around this place, price is just respecting, higher highs, higher lows, still bullish on the 1 hour, then I know our draw is up. It means it's looking like this same first scenario I was explaining, which is literally this first one. But if price changed character on the 1 hour, we have something like this on the 1 hour, then I'm convinced no matter how small this retracement or sign might look on the 4 hours, If I've seen this on the 1 hour, I'm convinced that we are trying to retrace to a key level. So whatever key level I find between this high and this low, which I call my dealing range is going to actually be my targets as my draw liquidity. So that FVG could be the DOL, the OB, anything close by. The most important level that's close to where price is becomes the next target. So I'm going to sell towards that. You see that? So now the question is, do I just sell just because I know that? Not really. So I'm going to break it down. First, all of this I showed you, there is the opposite version of it, like the reverse. The reverse version of this is going to be on the bearish trends. So it's important to know that. So this is a bearish trend, right? Of course, just like how this is a bullish trend. We all know that, right? If you don't know that at all, then maybe you should be learning basic market structure. But right now, I'm trying to teach you how to use market structure to get bias. So for the bearish version, if you have something like this, price breaks through and it's just going down, and then you go to the 1 hour chart and you see that it's respecting lower lows and lower highs, bearish, then it means price is drawing to something lower that was kept there back then, more like liquidity, FVG, something else. Price is drawing there. Now, if what you see is a bearish trend and price has already retraced to a key level like fair value gap, then you are literally coming back down to create a lower low to continue this sequence. So from here, you're pulling back down. So this becomes your draw on liquidity. Now, if you are in a scenario whereby you are in a bearish trend, yes, of course, but then you're seeing some sign of retracement. Now, what do? You go to the 1 hour, like I do, and inspect. Are we truly trying to reverse? And what you see is that if on the 1 hour price was bearish before, but then changed character recently to bullish, then that should convince you that you're not just trying, you're trying to retrace. And the retracement might end up in the closest importance area. So that becomes your draw on liquidity. So even if you're trying to look for buys, you are aiming here. Your eyes is at this spot. Now knowing this, how do I use this to trade and how did I use it to get funded? Now listen, I come to the chart on a specific time, and at that specific time, that's when I want to look at the 4 hours, and whenever I see any of these shapes I just showed you, that's when I want to take advantage. So when I see these shapes, I now know where price is going to. That's the draw on liquidity. Then I apply my entry model towards the draw on liquidity. Now let's go over what I mean. Now this is when I come to the chart. I come to the chart 7 a.m. Eastern time. Right now, I've recorded this video before, and that's why you see some write-ups everywhere, just that I didn't get the complete footage. So this right here is 7 a.m. Eastern time, okay, and that's when I come to the charts and I stay till 11 a.m. Eastern time. Now that's equivalent to 12 p.m. Nigerian time, West African time, till 4 p.m. West African time. 4 hours on the chart. Now when I come to chat by this time, I want to actually look what is going on. Which of these is at play? Is it this or this or this or this? Rather. Now when I figure out what it is, then I know the destination. If it's for this, I know the destination is this high. If it's for this, I know the destination is this next key level. And if it's for this, I know the destination is an old high or old fair value gap above. It's simple. Now I know it's bullish. I have to apply my entry model to the upside. Now the diverse entry model online. Okay. There is the ICT 2022 model whereby you wait for price to sweep liquidity on the 15 minutes and then wait for a change of character, retrace to FVG. Some like the unicorn model says you trace to breaker, and then you take your buy trade, stop loss here, and then boom. Right? It's an entry model. Now my entry model is almost like this. The only difference is that I don't wait for the breakout. I put my buy stop right here. Buy stop order, stop loss here, and boom. So it's still the same thing. Now I'm going to show you exactly how you can do this. But first, if you really want to know more about the entry model, this video right here explains details with many more examples on how to incorporate this to a full strategy with the bias here plus entry model. So right here is my VIP money room. This is exactly the place where I keep all the traders that have undergone my mentorship for 3 months. So after going through my mentorship for 3 months, what I do is in that 3 months, I teach you from the basic of ICT concepts to how this whole strategy works with multiple examples, multiple backtesting with you, and supervising you do it in real time. Now that supervision is what goes on in this VIP money room. Now after the 3 months, you're here to trade the same thing I've taught you, not just by yourself. Watch me do it live. So you're doing the same thing, you're watching me doing the same thing, we are seeing having the same views. I'm catching profits right in your very eyes. I'm making withdrawals in your very eyes, and you're doing the same. Now think about this. If you want to be part of this community, first we'll see how we do things here, and you see how everyone benefits, and then you know if I'm interested in joining or not. But then it will accelerate your progress really, really quick. Now, as you can see, this VIP money room right here, I post my trade bias right before it happens, and then you watch it happen. Now, so what you see right here is a bullish trend. You can see high is broken, break a structure, high. And what does it look like? It looked like this exact example right here. What did you see? Bullish trend retrace to key level, probably FVG, and where are you going to? Here. Very, very simple. Now, what do you see here? The same exact shape and setup. So here's the draw. And I said if price crosses here, bullish bias becomes invalid. I don't want to see price cross here. As long as we stay in this box, we are onto this place. You see that? Now, so many traders think, okay, the moment we have taken another high, liquidity sweep, they're dropping here. Nah, I'm not doing all of that. I'm using pure market structure to determine my bias. And anything you do, whether you do that or you do this, you'll be profitable as long as you're consistent. Okay? You have just have to be consistent. So what you see now, I actually spoke about the entry model. So if you look at USD card, now check where I'm trying to buy from. On the 1 hour, there's a liquidity here, resting here, sell side. I waited for price to run that liquidity. At the moment it did, I waited for, you see, I don't have to wait for break of structure. I told you guys, I put my buy stop right there, put my stop loss down. And what do you see? Boom, activated, and that was the trade. Bam, that was it. That was the win. And other people made the same profits, right? So I'm trying to actually look for others that took the same trade. As you can see, this guy took the same trade, and you can see my withdrawal right after that. Like literally everything in your very eyes, you can see it's all possible. You can see other people actually also withdrawing in the same chart, right? So one other example that actually gave me that actually helped me pass one account I bought recently from Good Funded. So I want to actually show you that example because that example was very, very like very sweet. Where's my Good Funded post? Right here, that was it. Bullish trend. You see price in this key level. Here's the draw liquidity. Very, very simple. What do I do? Apply my entry model. Like I told you guys, the real entry model video is in the description. Go and watch it. Like I had multiple examples. I just focus on entry model. But right now, you're just seeing the entry model for these trades I took. So what happened is price took out this place. Now I was waiting for price to return to this fair value gap, which is this blue area, or run this liquidity, whichever, because there are key levels on the 1 hour. I just wait for a key level on the 1 hour, and then boom, I get in. So what key level did price return to? Now remember this blue box is coming from the 1 hour. You see, price retraced back into that blue box, and then I waited for price to what take out that high. But I don't have to wait. I have to put my buy stop there. I don't need the break of structure to happen. I wait for all the comeback. I don't do that. As you can see, it didn't even happen. And boom, and that's how I got this trade. And it helped me pass phase one of my GFT accounts, an account I bought very recently. Boom. Do you see that? I think that was 1st of September. See the trades? Very, very neat. I still had my personal capital profit withdrawal. And you can still see somebody else too that did withdrawal. One of my students that did withdrawal with that same trade. Not like signals, but more like he already understands the strategy, but I trade with them for added confidence. All right, so this other example is coming from September 10th. Now, I've been using the example, most of the examples I've shown you are bullish. Okay, I want to show you a bearish example. Now, what do you see? Now, this is a bearish trend. Now, it was once bullish, but this is a change of character right here. And there is this important area right here, rejection block. Bearish trend, retrace to a key level, in this case, rejection block. Here's the draw on liquidity down, this low. That's what you see right now at play. And what do you see right here? We are to trade towards this. So it's a sell we are looking for. What do I want? My lower time frame, I want price to attack a key level in my 4 hours trading interval. That time from 7 a.m. Eastern time to 11 a.m. Eastern time, which is 12 p.m. Nigerian time to 4 p.m. Nigerian time. I want price to attack something on the 4 hours, on the 1 hour, and then I take my 5 minutes confirmation, which is what with sell stop. So as you can see, the liquidity was run right here, and that was exactly when I have to drop to my 5 minutes and look at it. And I had to set my sell stop right at where I know a change of character will happen, and I did so. And right here, you see the trade. This was USD card, like another trade, but this is the outcome of that trade right here. As you can see, boom, that was a sell. Boom, profits. That was it. These are my students, right? As you can see, this guy has the same thing, the same sales on his account. It's following up. You can see personal capital withdrawal after that, because I withdraw every single money I make from. I have an account where I conservatively trade, but I have another account where I just any profit I make I take it out. Like I want to resume every day trading at break even on the account, because it's where I get my primary income for daily expenses. So I've shown you enough examples. Okay. Now the strategy is literally this, as simple as this. Now, if you're the smart kind of person that have 100% comprehended it this way, go and back test. Do your test. Don't just fund an account and start testing all of this. Go do your back test. Test it. Gather data for test it before you go live with it. But if you watched it and you are this kind of person that you don't have that deep understanding on it, you need more. Well, I cannot give out more on this video because it'll be too long, and you can't learn everything in one video and in one day. So I recommend you join the mentorship. So the mentorship, I'm going to teach you the foundation of ICT concepts, every single element of this strategy. Then I'll show you how to read the market structure, and I'll also show you how to find your daily bias using my market structure, which is what you see me do on the 4 hour time frames, on 4 hour time frame every single day. And then after learning the strategy, you also learn the entry model. And after learning that, what happens? I put you in this VIP money room and we all trade together till you are a master at this craft. If you really want to be part of this, then on the description of this video, click on the first link that will lead you to Telegram. Just send me mentorship. I'm going to tell you how much it takes to be a member here. I'm also going to show you the course outline, what you're going to learn, how many months it's going to take you to grasp this and start making money from this. Okay, this is basically what got me funded, and I've been trading this for the longest time possible. I'll see you guys in the next video. Peace and love.